Hello, friends. And before we get to this episode of the 360 Experience, I have a special announcement for you of something that I'm incredibly excited about. It's a project that I've been working on for over a year, and it is my hopes that this changes the mortgage industry forever. A learning management system that is geared towards changing the way that you think, the way that you learn, and the way that you find success in the mortgage business. And it covers every topic you can think of: sales, marketing, customer service, leadership, time management, culture, personal development, and the list goes on. And it's delivered in a unique way with support materials that are going to help you execute at a level that you've never executed before. It is backed by the finest and most giving faculty that's ever been assembled in the mortgage industry, people that you've heard on this show over the last several months. In addition, we are creating a culture of mortgage professionals who think the same way and want to help each other. Folks, welcome to the Loan Atlas, and it is my pleasure to announce and bring it to you. The Loan Atlas goes live in early January, and you can sign up to be a founding member by simply clicking on the link below and entering the wait list. We're going to have a huge discounted price for founding members, so go check it out. Learn more about what we're doing to change the mortgage industry. We hope that you become a member so we can guide you through this journey of having more success in your business and in your life. Now, for another episode of the 360 Experience podcast. Hey there, friends. Welcome to another edition of the 360 Experience podcast and my conversation with my dear friend, Dave Gallegos. I am your host, Tim Braheem. And in today's episode, we're going to talk with a gentleman who's been in the mortgage business since 1997. And he started as a loan originator. He is now the president of Zenith Home Loans in Denver, Colorado. And I think that the benefit of Dave and I having a conversation together is that we go back so far. We've seen so many markets and cycles. We've been where many of you are at today, and the challenges with heightened interest rates. And in our conversation today, I mean, you're going to hear from a man who has a very strong passion, and that will be very clear when you listen to this conversation, a very strong passion for making sure that he does things right. His initiative with Zenith Home Loans is not to be the biggest company, but the best company. And we're going to talk about some things today that I think are very, very important for you to really circle back to: the daily disciplines of being a successful originator. And what that really means is the daily disciplines of being a successful salesperson, because at the end of the day, that is exactly what you do. Dave and I are going to talk about how to create massive accountability and leverage for yourself. And that is so incredibly important into staying in touch with those daily disciplines and making sure that you execute on them and you don't let yourself off the hook. We're going to talk in depth about the importance of being motivated and identifying your why in your business and in your life, so it can be the fuel that drives you towards the successes that you're looking to achieve. We're going to talk about marketing, and we're going to talk about the importance of being a master, especially right now, in your understanding of your craft, where to go to learn product at a more significant way, and to be able to use it as a unique selling proposition to cultivate new relationships in your business. This promises to be a terrific episode with a good friend and somebody who's incredibly wise and intelligent and experienced. Before we get to our conversation with Dave, I just want to remind you that we thrive on your subscriptions. If you are subscribing to this podcast, thank you. If you have yet to subscribe, please do so, and please forward it on to anybody else who you think would benefit. Our goal is very simply to teach as many people in the mortgage space as possible, both in their business and their life. And your subscriptions, your likes, your follows, and your comments, if you're watching this on YouTube, can be incredibly helpful for that initiative of ours. Without further ado, please enjoy my conversation with my good friend, Dave Gallegos. What's up, buddy?
How are you?
I'm good now that I'm talking to you, man. I'm certain to be in a good mood by the time this conversation's over with.
I'm sure we'll both enjoy ourselves.
Yes, for sure. Yeah, for the benefit of the listeners, you just had a really nice ride from Park City back to Denver on your motorcycle with our boy Rich Clayton. How was that
Yep.
ride? Did you guys have a good time?
It
Must have
was,
been
it was,
cold, right?
the ride back was a blast. We ended up having better weather than we did on the way out there. And
Oh,
then,
okay.
we spent the night in Steamboat Springs. We ended up having an amazing dinner at a restaurant. I think it was called The Laundry. It was outstanding. Like it was your kind of restaurant, just the food, the service, the, everything was served.
My kind of restaurant is snobby. Is that what you're saying?
Bougie. How's bougie sound?
I do like my fancy food. That's for
You
sure.
do. It
There's
was,
no
but it was
question about
really,
that.
you would have loved it. It was a blast and it was fun. We sat at the bar, had great service. And what was fun about the ride with Rich is that, he doesn't ride all the time, or he hasn't ridden in 25 years. And every time he got off the bike, the grin was from ear to ear. And that made it so much more fun for me. And I realized, yeah, I got to ride with people like that more often because it brings the joy of it back to me. Because you just,
Wow.
you do it all the time. It's not as fun, right?
It's so interesting that you say that, and we're going to get into business here in just a second, but this is an interesting point that you make. When I was single for all those years, I used to always say that, like, I want to find a lady that's well-traveled and it's been all over the world and can teach me some things and as much as I can teach her and all of that. And then, I meet Liz, and Liz has traveled, but she's not as well-traveled as me. And man, I didn't ever foresee the joy that I would get to experience in seeing these places that I've been to, like Italy, et cetera, through her eyes, and that's kind of what you're saying about Rich, is that, just like that ride is a ride you've done many times, but to just see the joy in somebody else's eyes and be able to live through theirs, that's a really beautiful experience.
Yeah, it was a hoot. I mean, we had a really good time. On the way back, the next day we left and we took a different route down to Silverthorne, Colorado, which is kind of the base of Summit County and where all the ski areas are. We went up over Loveland Pass, which is, breathtaking. And he's a pretty accomplished snowboarder skier. And so he's been to all these places, but not in 20 years. And we just had a great time. It was a joy. We had great lunch in Idaho Springs. And then, he had it was fun. We had a great time.
Very cool. I'm glad you guys did that together and bonded in that way. So let's dive in. Let's get to business. It's old school time again, isn't it? I mean, that little chuckle from you. I knew I'd get that out of you. I mean,
right.
We're back to the days of blocking and tackling. And you lead a lot of loan originators that work for your company, roughly 15 to 20. And I know the focus and intentionality that you put behind making sure that you're bringing value to them. I want to talk about, what are the daily disciplines for success right now for an originator? And we'll get into marketing and stuff like that. I'd like to talk a little bit about what you think loan originators need to be doing right now to market themselves as well. But let's start with daily disciplines. What are the things you need to be doing to be successful right now?
And it's a great segue because I wanted to show you. So you did that presentation for us in Park City and you talked about time management. You didn't say it wasn't time management, but it was how we manage time and how we use the time that we have. And I've been doing this for a long time where I'll print out my daily calendar and Outlook. And this section over here, because I don't use the task manager in Outlook, I just print out the calendar so I don't look at Outlook all day. So I'm really, really well disciplined when it comes to managing my email. I'm trying to get to inbox zero as much as possible. I don't go into the mailbox because I have a folder. Somebody checks my inbox and I go to a folder to review, what I need to see. But I've started making this list ever since we talked about this of before I leave, what do I want to accomplish the next day? Mm-hmm, mm-hmm. That is just, time management 101. I mean, it's not even, it's interesting that something so basic that we've heard a million times. I think you quoted Brian Tracy saying, when you're at work, work. That's it, dude. It's just buckle down and focus and stay dialed in to where that you're going to, because we're always, if you're an originator and you're busy, even if you're not busy, you're always trying to make something happen. So you're always you're always going. But if you don't have some way to know that you had a good day and that because what I've done is I've started looking down at this list during the day and I was like, oh yeah, okay, I got to do that. And I got to do that. And it's an amazing feeling to get to the end of the day. I've seen. So the daily discipline starts with, are you intentional about what it is you're trying to accomplish on an everyday? So I shared the presentation that you made. That's why, that was a great presentation.
Thank you.
And for the listener, if you haven't heard it and you're going to share it, I don't know, it's fantastic. And the ideas behind it were so, time honored. I don't know what the right term for it is, but it's so true that you can leave work every day knowing you had a good day because you accomplished everything you set out to accomplish. And there's a lot of satisfaction, and especially in the environment that we're in, where, everybody could use more leads, everybody could use more opportunities, more business, and to know it's a great feeling is what I've gotten out of it. And so it starts there. I think time management, time blocking, I think it's a lost art that people can really, that's always the beauty of this business is our time's our own. And the curse of the business is our time's our own.
Mm-hmm. Yeah, you're paid by the hour. Most people don't look at it like that, but you are definitely paid by the hour. What makes it different than a salary employed position in a traditional job structure is that you choose what you do with your hour, and that dictates what you get paid.
Well, you and I both worked in the grocery business, right?
Yeah.
At 9 o'clock, you had to sign in and you had to be ready to take your cash drawer over to the cash register, or you had to start stocking groceries, right? Like from 9 to 11, we're stocking groceries. That's what we're doing. And then you get a break for 15 minutes. Like we don't do that in mortgage, but if you did, you'd get a lot more done.
Yeah, you'd probably be a lot more successful. As you were saying that, you're right. Like it's like when the challenge, I think, is that we're left to our own devices and our own distractions and seductions and our own requirements of discipline. I mean, that's the thing about this job is that when you look at like the guys that we know that are still crushing it, like, Caleb LeGrand, I mean, poor guy, I feel so sorry for him. He told me the other day he thinks he's going to fund less than 25 loans this month, and he was a little bit worried about it. Like the guy's just a machine. Or Sam Rosenblatt. I mean, the common denominators of those originators, Holly Walter, who does good production consistently, is that they're self-disciplined, right? They know what makes them money, and they do those things a lot. So let's talk about those things real quick. What are the things that make a loan originator money in today's market?
Loan officer with most friends wins. I mean, I hate using an old term of yours, but I don't hate it. I love that term because it's true. And so how many conversations are you having a day? Yep. I pulled up the data that there's about 5,000 loans a month closing there in the last 4 or 5 months in the Denver market. And you could, do all of Colorado, but the meat of the market is the Metro Denver area. And for over 4,000 or 5,000 transactions are closing monthly. Dude, that's a lot of deals. That's a lot of deals. And if you're not doing what you want to do, it's just because you're not talking to enough of those people. And so it isn't like nothing's happening. It's not as, obviously it's not as abundant as it's been. So it just comes down to that, like how many conversations. And then I know we can sit here and like going, well, what am I supposed to say? And who am I supposed to call? It's like, well, everybody, I have to meet everybody where they are. I have a relatively newer originator who doesn't have a big sphere of influence in this market. Okay, dude, you're going to be an open house maven. So we're looking forward to the call later this week on open houses, or next week. You're going to have to go out and meet as many real estate agents as you possibly can. And that's how we're going to do this, because it's just making, it's a full contact business, and getting out and belly to belly with people and getting an opportunity. It's relationships. I mean, it still comes down to, are you in a relationship with somebody or are you not in a relationship with somebody? And then it's forever follow-up. Once you're in that relationship, it's forever follow-up and looking for ways to add value. For those loan officers that are out there right now everybody's, if you've been in this business for 5 years, you should have a big list of past clients. When was the last time you called one of them? You don't think you have anything to say because rates are so high. You're wrong. They need to hear from you. You need to find out what's going on with them, and you need to be checking in. So it's just, it's common sense, Tim. It really isn't. When I say it's common sense, I guess common sense is uncommon. It's maybe a lot of it is not knowing what to say. And that's where you've got to get some direction as to, well, what kinds of things can I be saying to those people? But it is maintaining a good, close relationship with every one of those customers. I love the way you used to set up all your clients when you were locking them in for the next refinance opportunity that was coming your way. Because every loan we're doing right now, we ought to be planning on refinancing a couple, 3 or 4 times in the next several years, right? So when I say through, that's assuming I'm acting like rates are going to get back down below 5 again. But you're going to refinance these loans at least once, right? And so do you want that transaction? I think you do. And so, and everybody that you've done a loan for in the last 2 years is going to want to hear from you. So you've got to maintain that level of consistency with your communication.
Yeah, I want to comment on a couple of things that you just said, and then I want to tiptoe into another area briefly that came up on a Zoom call today with Group 11 of L360 on the subject matter of adjustable rate mortgages. But let's talk a little bit about something here for the listener. I mean, let's even simplify this further. Your job is to talk to people who need to borrow money and people who can refer you to people that need to borrow money. And if you're not doing that, you're doing the wrong things right now. So let's look at that a little bit more, tease that out a little bit more. So your example of open houses is such a great example. What is at open houses? People who are looking to borrow money and people who actually can refer you to other people that might need to borrow money. So that's an excellent place to put yourself. But what are some other places that originators right now, I mean, you talked about calling your past client database. What else? What are, let's ping pong it back and forth. I'll tell you, you throw one out, then I'll throw one out. So people can really get a feel for that. There are a lot of opportunities out there.
One of the things that we've got guys doing is they're hitting up the banks. So we're going to the smaller regional credit union type banks because a lot of these, everybody complains about, credit unions. Yeah, but they don't all do what we do, right? Mm-hmm. So, hey, what do you sell that I don't sell? What do I sell that you don't sell?
Yep. And
I would love to have a reciprocating relationship where I had an outlet for something because there's things I don't do that they do. We don't do land loans. We don't have a land loan outlet. I'm sure there's a bank on the outskirts of town that does land loans because there's something, they finance land. So it's looking for and it isn't just one thing. Go ahead. So my first one is banks and credit unions that are not Chase, Wells, and, there's a couple of banks here in town that are pretty big banks that don't do FHA, VA.
Yeah, I had 2 really great banking relationships back in the day when I was an originator, and I used to get a lot of construction to perm loans from them because they didn't do them and they did the land loans. So I was their guy that, I'd do 3 or 4 of those a year and they were all big loans and you make good money on construction to perm. Okay, so I'm just going to throw out old school, and this just comes from me having had a conversation yesterday with Michael Regan, and he's doing this religiously. It's just going to real estate offices and going on Caravan. We're back to old school now, like going out, previewing properties, getting to know agents, taking them to lunch afterwards. This is a contact sport right now, and you need to be doing that.
It's a full contact business. One of our guys just did, this is funny. You're going to love this. Because I shared a couple of the recordings from Park City, and this guy took that stuff and he's like, I can turn this into a presentation. So he did a 2024, let's get ready for 2024, realtor lunch and learn, had a room full of real estate agents in our conference room. And they did a goal setting. They did a dream big. They went through this whole process of, they did your communication thing. It's making sure that you're taking time. What is it that's important to you? They did all that. There's a million things. There's a million things. That's what makes it a little more challenging. And now we're back to what you and I said earlier. In this business, your time is your own. But if you had to show up at 9:00 and run that meeting because your job was to fill that room, and if you didn't fill it, we're just going to let you go. That's not how this business operates, right? So, But if it did, you'd fill the room, right? Because that's
an interesting thing. Let's talk about that for a second. That's really interesting. So, if you were required, if I hired you as an employee and I said, I want you to call, 10 people in this list of past clients every day and just have a conversation with them, say hello, connect with them, see how they're doing, et cetera. And I want you to go out on 3 realtor appointments for lunch. Your job is to get 3 people to say yes, and I'm going to pay you a salary to do it. You'd figure out a way to do it. So why is it that when we're not getting paid a salary to do it, we don't figure out a way to do it and we quit and abort?
It's a great question. So this segues into this came up in Park City with Rich and I. And I'll give you a little backstory on it because we do this all the time. We all know, like, we're the beneficiaries of us going out and doing this work that you just described, right? Like, I mean, 1 loan pays $5,000, 2 loans pays 10, 3 loans pays like it's just exponential. There's no ceiling on your income in this business, which is what I love about it. And so a few months back, I had made I have an accountability partner that I check in with every Saturday. And I met him 10 years ago. We're still buddies, lives on the East Coast. He's a real estate developer. And we just check in with each other, keeping each other accountable to doing things like working out and everything. We're both very health conscious, business stuff. And he said, I'm going to start limiting the amount of alcohol I drink because he's a wine drinker. And he's like, yeah, I don't want to have more than 12 glasses of wine a week. And I said, oh, you know what? That's a really good idea. I should do that. I'm going to do that. And
12 is still a solid number, by the way. That's like close to two a day. So
yeah. So, but
way to show restraint.
How easy is it to have 12? Start counting. You'll be surprised. Anyway, because I've drank with you. So, so I said, oh, that's a good idea. I'm going to do that. So then I think that first week I did. I didn't have a drink Monday, Tuesday, Wednesday. And so I timed it. I was like, yeah, and then I don't know, 2 weeks went by and I just kind of forgot about it. I blew it off. Now I know limiting the amount of alcohol I take in on a weekly basis is a good idea. I know that it's good for me to not drink. I sleep better. There's a whole bunch of reasons why. And Rich and I were talking about all kinds of things related to accountability. I mean, it was part of the Park City experience, different things that we were talking about. And I go, why do you think we do that? Why do we say we're going to do something and then we just don't? Or we make a commitment, but not really. And then we don't do it. And we just go, I'm really disciplined in a lot of areas. Like I get up and work out religiously, but why do we do that, Tim? Why do we say we're going to do something and then we don't? Because in business, it's really expensive to say you're going to do something like what we're talking about. I'm going to call this many realtors. It's a really expensive thing to not do that, right? It costs you a lot.
Go ahead.
Well, so what I came up with is we're lacking something in the motivation to get this done. There's something lacking. We don't have a strong enough why is what it comes down to, is what I have figured out for me. This is what I have figured out for me. It's I need to come up with something that I'm going to not do this because this really pisses me off that I said I was going to do that and then I didn't. I don't want to be somebody who says he's going to do something and then not follow through. So what I came up with was I'm going to write a check. I wrote 5 checks out for $1,000 and I mailed them to my buddy back east. And I said, the checks are made out to a political party I don't support. And I said, and I'm not going to lie because what would be the point? If I drink more than 12 drinks in a week, you have to mail that. You have to mail one of those checks in. So I made out 5 checks to this political party I don't support. And it's like magic. It's like, I am not letting one of those checks get cashed. It just will not happen. And so I think my conclusion I've come to, and I've been writing about it in my blog post, is that's the thing. You've got to figure out a way to tap into something that no matter what, you won't let yourself down or you won't let somebody else down, and you will follow through with something that you should absolutely do. And I use the example you can make a promise to your kids that if I contact 50 realtors, if I make 50 outbound phone calls and I have 50 conversations a week for the next 6 months, we're all going to Disneyland. Or I'm going to take you to Hawaii or whatever the thing is, your kids will be like, did you make your calls, Dad? Are we going to go? Are we you won't let your kids down. So I think it's how do you find, I think that's the secret. That's what I think this is.
Yeah. So I'm glad that I asked the question. I read the blog post, so I'm glad that you already went there because I was going to ask you about it. I think at the end of the day, we're like highly evolved dogs, all of us. It's like, we are.
That's funny.
We are just fear and reward based, right? So it's like you got to tap into one of the two. So in scenario number 2 about the kids in Disneyland, it's like you're using fear as leverage to ensure that you create accountability for yourself, because the fear would be that your kids are going to be really disappointed in you and you're going to feel really shitty about that. And then on the other end of the spectrum, actually the other end of the spectrum is fear-based too. I mean, I in terms of not sending the checks to the political party that you don't support. Fear's strong, man. I think fear is a stronger motivator than reward at the end of the day.
Well, I think it's different for everybody. I think because it works for me.
Well, look, I mean, the guy or gal who is responsible for doing that as their job, they're going to do it. Why are they going to do it? Because they're afraid they'll get fired.
They don't want to get fired, right?
Yeah, they don't want to have a job.
Right.
So how do we create leverage for ourselves is the key thing. So I love your example in today's market. Like if you need to be calling 5 past clients in your database, or doing 5 lunches a week with referral partners, or calling on 5 builders a week, or whatever it is, how can you create some accountability structure for yourself, knowing that you will not blow it off?
Well, Tim, think about it, because something always comes up that makes you not want to do it. There's those days that I wake up that I'm like, I don't want to work out. I just don't. But I still work out. I don't know why. It's just now it's automatic. And I'm just like, yeah, I'm just going to go. And maybe I won't kill myself on the workout, but I'm not moving. And so, but that one's easy for me. Other stuff like the drinking or the same thing for me when it comes to recruiting or making sure that I'm getting all my coaching sessions in with my loan officers. Look, at the end of the day, my loan officers all have a dream. My job as their leader is to help them figure out what that dream is, and then do my part to help them figure out a way to hold them accountable, because without accountability, if they don't reach their dreams, we're both going to be disappointed. And I don't want them to be disappointed. I don't want to be the reason the dream didn't come true. So my job is to figure out a way to give you, because I can't motivate you by telling you I'm going to fire you, because in the mortgage business, I'm not going to fire a decent human being who's doing decent production. I'm not going to do that. But, and the threat of it is like not a big threat, because you're just like, okay, well, I'll just go work for those guys and they'll take me. And so it's like, yeah, okay, but I don't want that to be the reason that you stay. I want the reason that you stay is because I helped you figure out a way to reach that dream. And I want to participate in it, because that's the joy of this business for me, is to help you participate in that dream, because that's my dream. So
you bring up a great point there. It's like that an originator, the fear of being let go, in many cases, especially if it's a decent originator, is a fear that is held more highly by the owner of the company. You don't want to lose production. Okay. Whereas an originator always looks at it through the lens of, well, I'll just go find another place to hang my license. I mean, that's
in about an hour.
Yeah. And that's always an option. So here's another example of what we're talking about here. So 1994, I mean, we're scratching and clawing like nobody's business, bro. It was like 125% second trust deeds. That's about all there was. I was trying to figure out a way to sell negatively amortized adjustable rate mortgages. I mean, rates were at 9.75%. There was no equity in properties. It was really tough. And our sales manager, the owner of our company, when you first came up the elevator at our office, you turn to the left and there's this huge glass conference room. And there was a big dry erase board on the wall in there. And we would have a meeting every Monday morning, sales meeting in there. It wasn't a long one. It was like 30 minutes or something like that. And at the beginning of the meeting, let me just say this. At the end of the meeting, he would go around the room to the 12 or 15 of us. You're going to love this. And he'd be like, Braheem, how many apps are you taking this week? And I'd go, I'm getting 2, which would be a great week, by the way. And then next person, nobody would ever say 0. Okay. Because nobody would want to say 0. It's too
I'm not going to
get any apps this week. Right. As every app would. So first of all, he'd put the number up on the board. So when you come into the office every morning, you see your number. And whenever you took an app, he'd go in there and he'd put a tick next to it to show that you got it, and you'd be looking at it. Come Thursday, if you got 2 hanging up there and you don't have any, you're really motivated because now you're also looking at your peers and you're seeing what they've got. And then when we start the meeting the next Monday, the first thing he does is he goes around the room and he's like, Braheem, how many did you say you were going to get? 2. How many did you get? 1. What happened? And I mean, man, I mean, talk about using fear as a motivator. I mean, I was constantly thinking about what I could do to get my 2. Constantly. That's all I thought about all week long. Like, how can I get, that's where you want originators to be right now, is thinking along those lines.
And it's difficult, right? Because I find it difficult. I don't know if other people do. I find it difficult because there's no threat anymore of, I'm not, especially in this environment, we're not going to let a producer go. We're not going to let somebody go who's doing a couple loans a month, right? So, but the thing, and so that it comes back to but I don't want it to be fear based, but fear works for me because I don't want that check cash, and I'm not afraid of this because of my going. It was like automatic. As soon as I wrote the check out, it's like, there's no way I'm having a 13th drink. I'm just not. And it's only been 2 weeks, Tim, but like the first week was 11, last week was 12. This week's going to be less because I didn't drink last night either. So I got until Sunday. I can't drink 12 drinks between now and Sunday. So today's Friday, we're recording. So I'm good. Like, this is a layup.
Well,
so
I don't know, man. I mean, Lori's pretty persuasive, so you got to be careful.
So between, and we're going to be in SoCal on Sunday. So it's, I just think it's figuring out a way to tap into something that is like a no matter what situation, right? I think you were on stage when the dude from, I can't remember that guy's name, that did that. He asked you if you would walk across the plank with the $10 bill. I think this was you at Mastery. Do I have that right?
I don't think so. This doesn't ring a bell, but.
Okay. Well, he did the example of, if there was would you walk across a board for $20 if it was on the floor? It's like, yeah, I'd walk on that 2x4 or 2x6. And then, okay, if I placed it between 2 buildings that were, 20 stories high, would you walk across it for $20? No. Would you walk across it for $1 million? No. If I had your kid on the other side and I was going to drop your kid, would you walk across it? Yes. I wouldn't hesitate. I'd be across it in a second. And so it's finding that no matter what, I'm going to do this motivation, I think is really an interesting concept, because if you could figure that out for yourself, you'd have a superpower of being able to accomplish anything you set your mind to, anything at all.
Yeah. So I think that, just taking a quick note here, I think that the key takeaway so far in this conversation is to know yourself well enough to know what are the things that will create leverage for you and hold you accountable to doing all of the right disciplines in your business. First, defining the disciplines, but we did that for you already. I mean, talking to people who need to borrow money, or people who can refer you to people that need to borrow money, that's it. Okay. And then what leverage and accountability can you create for yourself? What can you put out there as an absolute non-negotiable that will hold you accountable to doing those things, just as a salaried employed person that has the fear of losing their job would do?
That's it. I think those are the two things. So you know what you have to do, and then we can get into all the different strategies and tactics and marketing verticals that you could employ to make that happen. But then like you said, no matter what, I'm going to do it. Motivation is, and so again, I want everybody to reach their goal, right? So if I can figure out a way to do it without accountability, it's not going to happen. So you've got to allow yourself you have to want to be held accountable. I mean, that's something that's really important, because if you don't, it's going to be like the person who signs up for the gym membership and shows up on January 1st and isn't showing up on January 31st. It's the same thing.
Yeah. I
wanted to do it, but not really.
It's got to be big for you.
Right.
It's got to be really big for you.
It's got to be like, I'm not going to let myself, it's either I'm not going to let myself down by letting that check get cashed, or I'm not going to let my family down, or I'm not going to let my friends down. I use the example of a golf outing, a golf trip to a golf mecca for the guys that are golf nuts. We're going to go play Pebble Beach for a week, and me and all my friends, but we all have to hit this goal of, we have to document that we had 50 conversations every week for 6 months or something like, but something like going, okay, this will be fun. And so it doesn't have to be a stick. It can be a carrot. And I think that's whatever works for you, because you're right. It's either fear of loss or opportunity of gain. Which one is your motivation?
Well, and the other thing too, that I don't, before we pivot to a little more tactical strategies on marketing and sales and things like that. I think it's really important to also make sure that you're creating leverage for yourself by putting it out there in the world. So people need to know about it. You can't hide behind it. So like if you're going to put that goal out there, like you said, you got to tell your kids. You can't keep it to yourself.
Yeah, no.
Or you got to send the checks to your buddy, okay? Because you don't want your buddy to be like disappointed in you. You know, I go back to when I was in my mid 30s, you know, and
how did you do it? Because you were a pretty direct, you were a driven dude. Like, how did you do it? Was it just?
Well, I'm still driven, I think, to a great degree, to a fault, right?
Yeah, so I
Like,
shouldn't say you were, yeah, you're not anymore.
you can overdo it with the drive, and I think that I'm guilty of that at times. But what I did, and you probably know the story, but you know, I got laughed at in my late 20s by my accountant, who asked me the question in front of my new wife, you know, how old do you want to be when you retire? And I threw a number out there of 40, and he laughed at me hysterically. And I remember thinking, you son of a bitch, like, how dare you mock me in front of my wife? And so I had that as my goal. But then what I did to really leverage it was when I was about 36 is when we decided that when I turned 40, I was going to retire and move to Italy. And the way that I created that leverage was that at the end of every presentation that I would do from a stage in front of hundreds, if not thousands of people, I would talk about that dream and that goal, that motivating thing. And I would close my eyes on stage and I would talk about, having a gelato with my kids and having a bottle of wine for lunch with my wife and walking down a cobblestone street. But I put it out there, man. Like, it was like, there was no hiding from it. There was no way to, there was a massive amount of fear around, if I don't hit that, I'm going to look like an idiot in front of a lot of people. And, that drove me maybe a little too strongly, but it drove me for sure. So let's talk about.
Well, good for you though. No, because you figured it out. I mean, I think that's something that a lot of people wouldn't do. They wouldn't want to put themselves out there for fear of the embarrassment. And I think that you can only gain by deciding to, like, I think Darren Hardy calls it a PDA, a public display of accountability, right? And so you got to let the world know what you're going to do and what's going to happen when it happens. And good for you, dude. You're right. I remember that story.
Jesse Itzler is a master of the public display of accountability. I've never heard that PDA phrase by Darren Hardy, but I like it a lot. I think that's really, really important for people to consider. How important, in your opinion, is knowing product in today's market?
It's we talked about it this morning on coffee. We have a coffee for closers Friday sales meeting at 9:00 every Friday morning, and we were talking about. I shared a resource directory that we've put together that everybody should have a copy of on their desk, which it's got live links to every, Fannie Mae website, Freddie Mac website, all the guides. We have the hub with all the product knowledge, with all the product guides and the, matrices and everything else. And we've made a living here at this business. I told everybody, I go, guys, we've made a living. We've made careers here by marketing what we still call the Zenith Trauma Center. And the Zenith Trauma Center is something we market to real estate agents every month. Every single month, they get an email from us saying, if you've got a deal that's crashing, or of another real estate agent with a deal that's crashing, or, the lender's gone dark and you're not getting any return phone calls, don't kill the deal. Give us a call. We'll let you know in 24 hours or less if you have a deal or if you never had a deal, so that we can put everybody out of their misery. Or we'll let you know, and then we have a trauma team standing by. It'll get pushed to the front line. It'll be underwritten within 24 hours, and we can close in as little as 8 business days. And so, which is the trade required timeline. And we don't have some magic loan programs that we just fund loans that other people are incapable of funding that don't meet the guidelines. We just know how to do the loans that everybody could do if they knew how to do them. And we've made a career out of it. So the amount of relationships that have been developed in the last, Giuseppe and I started doing that back in, I want to say 2006, 2007, when we were part of the Fairway, we were able to like, I did a loan once. I took the app on Monday and we funded it on Wednesday. And for a lady that was supposed to be getting a loan with another company and they couldn't do what they promised. They just quit calling her back. And so that's when I called Steve Jacobson up at that time. And I just said, hey, I need to be able to market this. Are you cool with that? Like if I rush, he goes, yeah, go ahead. That's Jake. He'll do anything. And so we did it, and we've been marketing that ever since. And again, it's just the same, like going, guys, because we would do an FHA loan, then another company would just say, yeah, no, we can't do that. It's like, okay, well, we can do it. And we're just following the guidelines. We don't have a magic FHA bucket of, we don't have to verify your income. We don't have that. So so the answer to your question in a really long-winded way is it's everything. It's always been everything. You have to know what you're selling, and you have to know how to solve the problems, right? That's what this is.
Well, and in a market like this, that's where loyalty is really achieved, is when you can get something done that someone else can get done. I could tell you 2 prolific stories I won't get into, but they're big, big stories that were life-changing. I mean, truly life-changing. We're talking about, one deal that I got done resulted in, best calculation, at least $1.5 million in additional income over the next 5 or 6 years because of the doors that it opened for me. And then the other deal kind of just totally changed my life, because I was able to get a deal done for a guy back in 1993 when I was only in the business for 1.5 years, 2 years, that he's been my partner in 3 businesses. He's still my attorney to this day, and he's like a second father to me, and it's like, it's crazy though, how many deals get passed up that could have got done by an originator. And what you don't know is what was waiting for you on the other side had you been able to get that deal done. The way to be able to then say to the agent, forget about all that stuff. What about just the confidence that you have? Like you getting a deal done that other people can't get done makes you feel good about yourself, which makes it easier for you to sell yourself.
You'd walk into those closings. I walked into that particular closing, that Monday to Wednesday funding. They were clapping. Like, yeah, I got the listing agent. I got the buyer. I had the buyer for life. It was just, so it's a very underrated skill. And I remember, this goes back to what I love about when we teach perfect loan process training is that we talk about, like, look, at the end of the day, the quality of that loan app is everything. The quality of the loan app taken by the loan officer on day one is everything, because everything will tee off the entire success of the transaction will tee off the amount of time and effort and attention to detail and that went into that initial application. Because you can solve any problem on day one. Day 29 is like the worst day to be solving it. And it didn't have to, it should have never had to come to that. So the loan officer that decides that that's the approach that he needs to take is going to have a much more gratifying career. Everything's going to be easier. He's not going to waste time working on deals that he can't do. That's another one. We don't even talk about that. How many times have I worked with loan officers? I'm like, why are you working on this? Well, I'm trying to figure out I'm trying to figure out a way to get them more income. And I said, look, you're not going to give them a raise because they make what they make. They make what they make. Just tell me how much it is. And then and we're done. It's not hard. And so whenever I would hear that, I was like, would laugh, like going, what are you talking about? Trying to figure out a way to get them more income. They either make it or they don't. How much is it? And so it's a simple concept. So it is the basics of this business. The fundamentals are always going to matter. And you got to get the fundamentals down.
Yeah, I think that you hit on 2 really important things there. One is that, if you are skilled, and I want to ask you in a minute, like, what are your suggestions on how a loan originator can become more skilled at structuring loans and knowing product? So, but before we get to that, if you know, it's equally important to know how to get a deal done that others can't get done as it is to know whether or not it makes any sense to be spending any more time on a deal. Like that's a very underestimated thing too that you're pointing out. I mean, I go back and I think about all the times that I spent days and days and days trying to figure out how to get this mixed use property with with 3 acres of avocados and producing income done on a residential refi that was never going to get done, but I didn't know that, and I wasted a lot of time. So that's why it's really important to really have a great understanding of underwriting guidelines and product, because again, you know when you don't know shit. Okay, so you're not going to pursue top producing real estate agents and CPAs and financial planners if you know deep down inside you don't really know your stuff. But if you if you know that you know your stuff, you have a totally different mentality.
I mean, Ken Perry. Like, Ken Perry, right?
Of course.
Yeah, Ken I love this because Ken talks about it as goes. Yeah, I became the #1 producer at our company because I knew all the guidelines and I studied them. I just studied the guidelines. No one else studied the guidelines. Became the #1 producer the first year, and there's so much wisdom in that because you're right. I had a great. It's still one of my best friends, real estate agent, owns a bunch of commercial real estate in Denver, and been to 3 Broncos Super Bowls with him, and he was a real estate agent for about 20 years before I got in the mortgage business. And I was working on, I don't know how I got this lead, but I worked at a broker shop that had, back in the day when you'd get like 50 rate sheets faxed over, there were fax machines in that office. So people don't know what fax machines are, but there were fax machines, and there was somebody's job was to take those rate sheets that came over and put them on the clipboard and hang the clipboard back up on the wall. And I don't know where I got this lead. Somehow he found us in Colorado, and this guy wanted to refinance a multifamily property that was more than 4 units, right? And so it was kind of like a commercial loan apartment. So I was trying to figure out a way to do it. And I was working on it. And I was checking, I was calling this investor and calling the guy and calling the investor and calling the guy, trying to figure out how it works. I worked on it for a few days. And so I called my buddy who I was getting a lot of advice from when I first got in the business. And he goes, "Why are you working on that?" And I go, "Well, it's a big loan." He goes, "Dude, stop." He goes, "Single family homes, condos, and townhouses. Just focus on that. Okay. Yeah. You don't need to do apartments. You're only going to do 1 apartment deal every 5 years. Focus on the houses and the single family homes and the single family condos and townhouses. That's what we do. That's what you do a lot of." And I said, "Dude, that's really good advice. Thank you." And I just hung up and I told the guy, "Oh yeah, I can't work on your loan, dude. We don't do this." And I went on my way. Now somebody's making a good living financing apartments. I'm sure a great living. It's just not so it's knowing what you want to do and knowing what you want to be instead of thinking that you have to be all things to all people. I've done enough. I've done 3 construction to perm loans in my life, enough to know I never want to do them. It's just me. It's like going, yeah, no, this is way too complicated. There's way too much work. Takes way more time than I want to spend on a loan. And so I just don't do them. Now somebody's making a lot of money doing construction to perm, and they should. But you have to know what you want to focus on and then focus on it. And I just think that when you try to do everything, you can't get good at anything. Like, how do you get good at it if you only do it once every 3 months? You can't get good at that.
Yes, well said. I actually just recently did an Instagram reel on this topic where I just said, the biggest mistake that I see people make in business is they try to be good at too many things, and instead just be great at one thing. Great at 1 or 2 things max, you'll always be successful. Now let's go to real quick before we pivot to marketing. What's the recommendation that you have for people to get more skilled at their understanding of underwriting guidelines and how to structure loans and product knowledge? Is it to just study the guidelines like Ken Perry did, or is there any suggestions you have?
Well, so we buy the MRI guides. I don't know if that was something that you had. This is a Fannie, Freddie, and Ginnie guidebook that comes out quarterly, and we buy those. I've subscribed to those for years, and they come out with updates on a fairly consistent basis. So you get a new book in the mail every quarter. And when we hire brand new people, we're like, you need to read that cover to cover your first 6 months or first 3 months that you're here. Like, read it cover to cover. Everything that you want to know about how to do a loan is in that book. And then if I had an originator tell me the other day that the findings on a file, she didn't read them. And I'm like, why? It's like, well, I don't know. I'm like, have been doing this long enough to know that there was a time when you had to do a loan without getting a set of findings, and you had to keep your fingers crossed to see if the underwriter was going to approve your loan. So when like findings, when, being able to get automated underwriting and have findings that actually told you what you had to do and what you needed to be able to get the loan approved was like, a godsend to me. And so it's just, you got to have the reps in, you got to study the guidelines and spend time. Right now, your underwriters aren't that busy, are they? And so be great to schedule, hey, can I get an hour a week with you to like talk through like what are the best practices? What can I do? I want to be the best loan officer on the planet. I want my files to sail through underwriting. What do I have to do? What is the one thing that you think that I could do to make this better? So it's just, being very intentional about getting good at this. And there's, like I said, the payoff is huge.
Yeah, sitting down with underwriters. I mean, the reason that I knew how to read tax returns so well is because I did that with two CPAs. I sat down with two CPAs for 2 long lunches and asked them to teach me how to read all the schedules. And I took notes and I really understood it. But you got to invest the time into being an expert in your trade. And in today's market, being an expert in product knowledge and structuring loans is incredibly important because it will get you deals that you would normally have not been able to do. And then that's a whole new relationship. Marketing. Let's pivot over to that. There's, as you mentioned earlier, there's a lot of different channels for marketing. I get a little confused sometimes, bro. Like there's this part of me that wonders if I'm just old school and I feel like the old school stuff is the best stuff because it's what worked for me, or if I'm actually smart and some of this new school stuff doesn't work, like all this Instagram stuff and all the time that people put into it and being an influencer and all that. What's your take on marketing? What do originators need to be doing right now to market themselves?
Well, I guess it depends on what when marketing is a big, it's a big term. It's a big umbrella. So there's so many things that could mean. When it comes to, the marketing, I never did with the things that you did. A lot of direct mail. You did a lot of consumer direct things. I think I never did anything like that. I was relationship guy. So I just talked to lots of people every day and used to sit and think, who do I know that I could call that might need a loan? Like I would just make phone calls and talk to people. And I didn't like the idea of waiting and clearly, there's companies that crush it doing this. So my take on it is that you've got to find what will you do, and then stick to it and get good at it and understand that you're going to have to take. I think you told me, the story about Loan Toolbox that you guys spent how many months before you sold your first subscription talking to loan officers about buying it? And I mean, multiple months. A lot of guys, most people in our space would give up and say, this isn't going to work. I can't sell this. And then they'd move on. It's that old adage of I've seen this a lot in our business where loan officers say, I'm going to try this. And then they try 1 or 2 and it doesn't work and they move on. Mm-hmm. And it's that adage, the analogy of, do you want to dig 100 3-foot wells and never catch water? Because you keep like, there's none here. I'm going to go and dig another one. It's like, no, dude, you got to dig 100-foot well, dig 3 100-foot wells. You'll hit water. And so it's staying consistent with whatever it is you are going to do. And there's enough good information out there that I think that you can benefit from it. What I'm seeing a little bit on the social media, and I love the term of calling it not social media anymore, but I'm using this term here at the office, is business media. This is business media. And make sure that you understand that you're not trying to be social. A lot of guys have that. It's like, I don't want to do that. It's like, no, dude, you're trying to become as well known as possible in your market and in your sphere. And if you're gonna invest that time and energy, then you have to be active. You don't have to be active all day. I think that's where a lot of people struggle with this. It's like but you've got to interact with people you've got to engage with the people that are engaging with you. So if you get a like, you got to give them a like back. You got to make a comment. People have to feel like that. And all you're doing, if you're a loan officer and you're trying to develop relationships depends on what you're doing. But I would think that what I've seen is the best use of like an Instagram program is to use it to develop relationships with other like real estate agent influencers. I don't mean social media influencers. I mean people that have leads that they can refer to you and use that. I know that's what one of my guys have done. He's done a really good job is he's developed relationships, good referring, working relationships with real estate agents in this town that he met using social media as, you know, the things that he's posting. And then he would find them and they would like him and he would develop the relationship and they'd get together for a cup of coffee and they saw where it would lead. So it's just a different way of doing what we used to do back in the day where we would just pick up the phone and go like, hey, I met you. My research tells me that you and I would have a lot in common. And I would just like to sit down and meet with you and get a chance to get to know you better. And that's how you started a real estate agent relationship, right? It's the same thing, but you have the ability now to do it at a higher scale. I don't know that it's any different, Tim, than that, but I've not seen anybody use I have not seen anybody. There's some guys out there that are getting a lot of leads. You can tell they're getting a lot of activity. It would be interesting to see how much lead activity it's turning into because I don't have any experience with that.
Well, I think that the lead activity is to be determined, right? Because I think that the lead activity has a very high probability of being a lot if rates were to drop and there were an abundance of refinances. I think that I have a hard time believing that a guy like Mark Bowie or Sosi or Michael Regan, who has 82,000 followers, I'd have a hard time believing that they're not going to get refis when refis are available by just doing some reels on their account. When you got 82,000 people following you, it's just a numbers game. I think that what you brought up was really important, and I'm glad I asked the question about how you can use social media as business media. I love the pivot there in terminology and the connecting to other influencers. So really making sure that you're following real estate agents in particular that have a large following themselves and engaging with them on that platform, commenting, liking, etc., and then seeing if you can use that as a segue to a relationship. And the reason is because you right out of the gate naturally have a conversation piece, right? That's what an originator is always looking for, to have a conversation with a real estate agent. What can I say? What can I say that's going to be compelling? And we make it really hard. But if it's like, hey, let's get together and have some coffee and talk about our social media marketing strategies, and I like some of the things you're doing, and I wanted to pick your brain on this, and I have some ideas of things that you could be doing differently. If a real estate agent's investing a significant amount of their time into their Instagram marketing strategy, and somebody else comes along and clearly is doing the same, they're going to want to mastermind with that person. Yeah. So it's an easy conversation to have. So I love that. I think that I want to comment on what you said as well about the digging of the holes metaphor. It's another metaphor would be, or it's not even a metaphor, I guess, supposedly, Thomas Edison's team had said to him, this isn't going to work. When they were trying to invent the light bulb, and we've tried 10,000 ways to invent the light bulb and none of them worked. And he said, nonsense, we know 10,000 ways that it doesn't work. You know what I mean? It's like that mentality. So yeah, back in the Loan Toolbox days, we took about 5.5 months before we made our first sale with a telemarketer and a salesperson. And it was trying to figure out how to demonstrate the value of this product that we had created, that no one else had ever seen anything like it, and how to get somebody on the phone, how to get them to take the time to sit through a demo. And then once we figured it out, then we were able to scale it. And it's the same thing with my consumer direct marketing strategies back when I was an originator. It didn't happen quickly. And you're right. Originators are looking oftentimes for immediate gratification. And it's like, I get asked this question a lot and have been for years, like, what should I focus on? Divorce attorneys, human resource directors, CPAs, financial planners, real estate agents, local community banks. What should I focus on? I'm like, pick one. They all work. They all work if you're great at it. Those are all viable sources of business. But if you're going to dabble, like I dabbled for a little while in HR directors, and I got that many loans, 0 for those of you that are watching, because I dabbled. If I would have 100% focused on how to present to a human resources director and to get into the local, large companies within my community, I'm sure I would have been successful with it, but I dabbled, so it's like, what are you going to be an expert on is, I think, the really important question. And then, are you going to quit, or are you going to see it through until you figure it out? Because that's really all it is about, is just figuring it out.
Yeah, that's a really good point, because this business has a lot of, the market rewards in this business. The market has always rewarded competent people really well. And when the market's good, competent people do really well. You don't have to be great. You could be competent and you're going to do really well, making money beyond what you ever thought you would make. I mean, that's the truth about this. Let's be honest. The truth about this industry is that people come into this like going, I get paid how much to do this? This is insane. I can't believe I make this much money. Most originators that I've talked to I've heard them like going, yeah, I don't deserve this much money. This is amazing. Like I can't believe this. And so
most of them are right.
And they are right. No, they are right. You can make 250, 350, 450, $1 million. You can make $1 million. Tim, you can make $1 million with a high school diploma. And that doesn't take like those people are working. I'm like, I don't want to make it sound like they don't work hard. They do, but you didn't get any education. You didn't absorb $200,000 worth of student loans to become a doctor and have people's, like life and death type surgery. So you think about what this opportunity is and so, yeah, they dabble because, especially coming out of 2020 and 2021, this is a shock because like, why is this so hard? And this came up a lot when we were in Park City, where loan officers now are like, yeah, I don't want to do what I had to do then. I don't want to have to go out and prospect like I did. Like I thought I was done with that. It's like, you're never done with that. That's get that out of your head. And because when you first started in this business, we all talked about it. When I said this, everybody was nodding their heads like, yeah, you're right. Like you would do whatever it took. So go back to that. Go back to doing whatever it takes to get business, and then understand, like, commit to something. I love what you said. Like, don't dabble. Decide you're going to become an expert at being an HR focused loan officer who develops employee benefit and retention packages for companies. And you're going to go out and present it, and you're going to keep doing it until you come up with something that you can do it and have all the leads that you'd ever want. Because that's all this is coming back to like, how are you going to generate all the leads that you need? And that's a great, that's it.
Well, I love what you just said right now about, that you're so right. So many originators thought that they were done. That like, I thought that I was at a point where like, I don't have to do this anymore, that I could just lead my team and that they would do it. And some originators have pulled that off and they're still leading a team, but most of them have had to roll their sleeves back up and, in their viewpoint, regress in terms of what they thought that was their job. But you're really never done prospecting until you're done doing this job, as you just said. That's, when you retire is when you're done prospecting.
Well, I don't know what this was like for you, but I've seen this over and over again. And I had this happen to me, right? Where I got like 6 realtors that are really good. They're referring me. This one I was still producing. I was like, this is great. I don't have to do this. This is awesome. And then what happens is, somebody gets married, has a baby, they're not producing anymore. They get picked off by another loan officer. For whatever reason, they get out of the business. They go to like, I don't want to be a real estate agent. It's like, geez, you got to keep going out and getting real estate agents. And then I'm like, yeah, I guess you do. But do you know of another job that pays this well that for what you do? And I don't. And Mike White asked me that question once when he was coaching me. He said, is there another business that you can get into? It was 2006 or 7. I was really struggling, was actually thinking about closing my company down. And I went out to dinner with Mike, Lori and I did. And it was the end of 2006, I think. And he said, is there another business that you can get into? You can make 20 grand a month faster than you can do it with this business. And I said, no. And he goes, well, I guess you're doing this then. And I was like, yeah, because we just like, how much money do you need to make? And I had kids getting ready to go to college and stuff. I was like, dude, I need to make about 20 grand a month. He's like, well, is there another business you can get into? You can do it faster? Like, no. And he said, well, then let's do this. And so then just buckle down and do the work because it's there. It's still the most amazingly well-paid, hard job for sure that you'll ever have.
Think of a time when you were in this business and you were struggling. Could be right now. You were struggling, you were second guessing, you were feeling a little defeated. What did you do in those times to find your motivation? And are there any books that you suggest, or what did you do to like pull yourself out of the funk or the worry or the fear or the negativity?
Um, Man, there's been so many great books that I've read that would be hard to, I give you a list, but, my back was against the wall, Tim. You know, I had 3 kids, 2006. They weren't in college yet, but they were getting ready to go. And, like they had to eat. I had to figure it out. Like, so it wasn't, and I was I considered myself, I was 46 in 2006. Right. So I thought I was unemployable. Like no one's going to hire me because I've had so many entrepreneurial endeavors. No one's going to pay me a salary to work for them. They're going to go like, yeah, you're going to start your own version of this. So we're not hiring you. Like, we don't want to train you. We don't want to train our competition. And so it was just like, I have to do it. What else is there other? And that was it. And so then it's just getting to work. Lori came to work here full time then. And my wife and helped us develop, really is the one who documented all the processes and systems that we were implementing and trying to, we got really good. The E-Myth was a big game-changing book for me. The E-Myth Revisited by Michael Gerber. And that's when we started to develop all the processes and procedures and systems and checklists here that really helped us turn the corner. We established standards of how we were going to do everything. And a lot of those checklists and processes and systems and procedures are still in place today.
How important are those standards and systems? Those are the things that I don't think that they're sexy, right? Like, I mean, that's the thing, is that like the average salesperson's like standards and processes and procedures, like that sounds like bullshit, but like, what's your experience with the importance of it? Clearly it's important or you wouldn't have brought it up.
I think it's the difference between an amazingly run company that you want to be a part of and then, everybody else, because everybody else kind of treats it that way and nobody wants that experience. At the end of the day, it's simple things, Tim. I think that everything that you do, one of the things I'm really passionate about is helping my loan officers figure out how to overcome price objections. It's just something that I've always been I love talking about it. I love hearing about it. And I always start with this. I go, you know how you overcome price objections? You don't get them. And you know how you make sure you don't get them? You crush every part of the interaction the client has with you. And your perfect loan process ties right into that. It's how you responded when you were presented with the opportunity. And if you're supposed to call somebody at 5:00, me being late to this podcast, notwithstanding, because I didn't click on the right link, but I'm death on that. Like meetings start, if a 9:00 meeting doesn't start at 9, it starts at 8:58, because if we're going to start at 9, you have to be ready at 9. And so if you tell a customer you're calling them at 5 and you call them at 5 after, you've just set the tone that you're not very reliable, and you've created doubt. And it's as simple as that. And so a standard and a system for here's how we do it, and we follow this process, and you use this checklist, and this is how we're going to do it. And we're actually, we've had a conversation today. We're not perfect. We're not perfect. We make mistakes, and it's easy to backslide. And then all of a sudden you look up and you find out people aren't doing some of the basics, like, a legitimate, regularly scheduled pipeline meeting with your processor. Like, that's crazy to me that a loan officer wouldn't take the time to do it. But I'm finding out that if you guys are like skipping the meeting, I'm like, well, don't be surprised then if there's like a breakdown, because you're not involved. Like, you don't know what's happening. That's crazy. And so I think it's critical. The answer to your question is it's critical. And it's, I love about this. I always want this to be a place where everybody goes like, those guys have their shit together over there. Man, that is a well-run company. And that's what everybody wants to be a part of. It's what I want to be a part of. I want to be a part of a well-run company. I don't want it to be embarrassing. I worked at a lot of embarrassing companies when I first got in this business. Like, I worked at 5 different places before I started this in 2000. 4 of them, I wouldn't even want anyone to know I worked there. Like, that's how poorly run they were. And then one of them was good, but the rest of them were like, God, I hope nobody I know comes to this office and meets any of these people. So it was that. It was wanting to be part of a great business.
I think I love your answer, and I think that there's a couple of things that processes and procedures and systems do that are underestimated greatly. So number one is that the more systemized you are, the better you get at it. Because if you do the same thing over and over and over again, it becomes a repetitive habit. And if it's a good system, then you just get excellent at it. So like when I think about like my system for selling myself as an originator, I can still recite, as you know, all those scripts to this day, even though it's been 17 years or whatever it's been since I did a loan. And the reason is because I said the same thing over and over and over. I had a system, a process for how I presented to the client each and every time, how I took control of the conversation, where I led them in the conversation. The other thing that I think that a system and process and procedure does is on a very important psychological level, it gives you confidence that things aren't going to go awry, you know,
100%.
because you know that you've taken the time to like check all the boxes and you have the right procedures in place to where you're not looking over your shoulder and wondering like, is something going to get screwed up? You know, and it's also clear communication with the teammates as well, if everybody knows. So when you were in a tough time, the way that what you did was you pivoted to really systemizing your business. And I didn't know that Lori was involved in that. So that's super cool to hear.
Well, I told her, I'm like, I either have to pay somebody, which is less money for you and me, or you can come in.
Yeah. I got to try that with Liz.
Yeah, try that. It worked.
Actually, that's why you saw Liz in Park City.
Yeah.
Yeah.
Right on.
Yeah. So yeah. I know that path. But what about motivation wise? Like, have you ever had a time where you've been like, man, I don't know if I can do this anymore, or I'm really frustrated, or I'm at my wit's end. And like, what did you do to like snap out of that and get motivated? Because I have
got to connect back. You got to get, for me, I have to connect back to my why. Like, why am I doing this? What's the point? What are we doing? Because it's not easy every day. It's like I said, it's like you lack the motivation. It's like, I'm going to want to go ahead and have that 13th drink. Like, I just want to do it. And there's days you're going to wake up and you just don't feel like it anymore. You've lost the motivation. You've lost the edge. It's boring. It can get boring and repetitive. And you have to get back to why I'm doing this. And for me, it is the why is these lives that I get to impact. We just celebrated. This is, I'll get choked up. We hired 2 girls that started working here 10 years ago. Like in the last couple of weeks, their 10-year anniversary was. And we had a happy hour for one of them, and the other one's father just recently passed away, so she wasn't able to come. But we'll have another celebration when she gets back. Do you know how humbling that is? 10 years. Somebody's worked for us, for this company for 10 years. That's that chokes you up. And so it's fun to have a business that you feel like you're doing that with people. And then you see their lives, how she wasn't married. She has 2 children, right? When I met one, she had just her first job out of college for one of them. Just, you know, the story about Giuseppe. I mean, I hired him. He didn't know Marine, and now they have 3 kids. They just got back from 10 days in Italy. And I feel like he's one of my kids, like everything that's happened to him in his life and his career. So the joy of this business for me is that the thing that I get excited about, because I get down. I'm not immune. I get down. It's been a tough year. We've been very fortunate, knock on wood. We're not, you know, we're in a good position financially as a company and an organization. So, but it is, you know, it beats you down sometimes for sure when it's not all positive. And then it's remembering why you're doing it. And I want to go find more people that I can help get excited about this, because figure out what the dream is for them and help them achieve it. Because if you're a part of that, it's just, for me, it's the best part of what I get to do. So, and then if you're an originator, it's like, well, so why are you doing it? Because there's a lot of joy and satisfaction in helping somebody buy a home. I've sold all kinds of crap in my life. None of them were life-changing for anybody except me, because I was going to get a commission check. And when I started doing this, I was like, wow, this is different. This is I'm really helping people. This is amazing. And I'm getting paid really well to do it too. So yeah, it's that was the coolest. That's it for me.
Yeah, it's interesting. So full disclosure, the subject matter of helping people buy a home was it never resonated with me. Like I wasn't doing it for that. That was not my why. Maybe a little bit embarrassed to admit that, but that's my truth. But I did have a why. My why was to be able to create financial freedom for me and my family, and to be able to, as I said before, go and live a year abroad and all of those types of things. I think that what you're really talking about there, and I'm really glad that you went there, is like, what is your fuel that keeps your tank full? And when your tank starts to feel like it's empty, like, what do you need to tap back into to fill it back up? And for everybody, it's different, but I think it's incredibly important across the board for you to have one, because this is a business that will consistently kick you in the teeth and humble you for sure. And it's in those times of being humbled that we need to know what our go-to is, to be our compass that points us in the direction of, okay, yeah, that's why I'm doing this. Any tips on, like, I know the story about how you kind of identified that, or at least in part identified that as your why, based upon.
To be clear, I was just excited. I was selling something that actually helped people, and I was getting paid. the financial, the same thing, taking care of my family. I've told this story a lot, where each one of my kids was born, there would be a night during their first year of life where I don't know why I did it with Jacqueline, and then I did it again with Donnie and Nate, where I would go into their room and hold them and sit in the rocking chair when they were little babies, and just make a promise to myself that I was going to do everything that I could to give them the best life possible. So that's that's the higher purpose. And then to create the life that Lori and I were going to be able to. I made big promises to Lori when I told her we were going to get married and spend the rest of our lives together when she was 18. And so those motivations are real. Those are the things that really, you find that thing in your heart. Darren Hardy calls it, I'm a big Darren Hardy, but if you can find a why that'll make you cry, you've got it. And those whys make me cry. My kids, now Lori and I, our lives, because our kids are all grown, and those whys make you cry. And those are the ones that'll keep you going.
You had a pretty strong why to eat a lot of gelato in Italy this last summer when we were together.
You know how much gelato I've eaten since I got back too? Like, I never used to eat it or buy it.
Well, that's why I hit you up with a little care package of it. That was some good stuff, that gelato I sent you in the mail.
Very good. Yeah, no, it was very good.
Yeah, Doreen, I told her to send it to you, and then she turned around and sent some to me. So I got some of it too. So I think this is a good place to conclude our conversation. I mean, the why that makes you cry, like what is that for you? It kind of brings the conversation full circle where we started with, the challenging market we're in, and what are the daily disciplines. You're only going to be motivated to do those daily disciplines if you have the motivation behind it. So I just want to encourage everyone to really take some time to contemplate that, and really identify that, and use that as your compass. Dave, thanks so much for being here with me today, man. It's always good to spend time with you and see your smile. And I want you to know that I really respect you as a man very much. And it's an honor to call you my friend.
Well, thanks, dude. You've had a huge impact on my life, and it's an honor to work with you and to be a part of this community. So thank you.
You got it, buddy. I want to thank everyone for tuning in, and just wish everyone a beautiful rest of your week. And we will be back at you again in another 15 days with another episode. Bye-bye, everyone.
Thanks, buddy.